Hi there, good morning and welcome to an exciting time to talk business. My name is Blyden Ukem and it's Business 360 on Spectrum TV. In today's Business 360, we'll look at the key features in the world of business. Some of the big stories. Kenya is commenting and cementing its position as East Africa's leading car dealer. NNPC will begin oil drilling in Nasarawa State on March 21st. We'll look at key data releases for today, the commodity markets, forex market, and the stock market report. But we begin with Tesla. A group of Tesla workers trying to form a union in New York State has accused the company of firing more than 30 people to try to squash the campaign. Organizers in Buffalo said the staff were sacked a day after the union went public with its efforts. I strongly feel this is a retaliation. So the electric car firm is led by billionaire Elon Musk, who has been outspoken about his opposition to unions in the past. Let's look at Kenya's situation. In 2022, Kenya's vehicle exports to East African countries skyrocketed. According to data from Kenya, Africa sold 387 units to foreign markets in the fiscal year ending December. This was an increase from 193 units the previous year. During the period under review, most exports went to Tanzania, which purchased 241 units, and Uganda, 146 units. Most of exports were commercial vehicles, pickups, lorries, and prime movers, and most were produced locally. Kenya has noted that it is capable of supplying the vehicle quota of the entire East African markets. That's the outlook in Kenya amid manufacturing of cars, looking forward to supply East Africa. In Nigeria, the Nigerian National Petroleum Company Limited, NNPC Limited, will begin drilling the first oil well in Obikana, Nasarawa State on March 21. The NNPC Group Chief Executive Officer Mali Kyari disclosed this when he led the company's management on a courtesy visit to the Nasarawa State Governor Abdullahi Sule on Thursday in Lafia. Kyari said the company began exploration activities in Nasarawa in 2010 and has technically found a petroleum environment in the state. He revealed that the exploration would not be limited to Obikana location alone. Still looking at the stories around Nigeria. Nigeria pumped additional 31.1 million barrels of crude oil within a space of 4 months following improvements in security in the country's oil-producing Niger Delta region. The Organization of Petroleum Exporting Countries has said this. Latest data from the organization's monthly oil report for February showed that the average crude oil output from Nigeria in the third quarter of 2022 was 0.999 million barrels per day, according to figures accessed by OPEC based on direct communication. This, however, increased to an average of 1.258 million barrels per day in January 2023, indicating an estimated daily rise of 259,000 barrels and 7.77 million barrels in a month. This therefore implies that the country pumped an additional 31.1 million barrels of crude within the 4 months period of October, November, December, and January. We'll also have a brief look at Naira scarcity. The Association of Senior Staff of Bank, Insurance and Financial Institution has revealed that banks have lost the sum of 5 billion naira across the nation following recent attacks and destruction of bank facilities. The association president, Olowale Olusoji, disclosed this at a news conference in Lagos. He said aside from bank buildings, bonds, and automated teller machines destroyed, bank officials were also affected. Olusoji said 17 branches have been attacked so far. The concern is huge amid the scarcity of naira in the country. It would be a good time to move to global economy to see what's happening around the world regarding the economy. We'll begin with economic calendar, key data releases for today, Friday, February 17, 2023. Looking at the economic calendar this morning, The outlook has been that of some positivity at different angles and negativity at different angles. Around 12 a.m. in the morning, the Fed gave a speech in the US. Similarly, in Canada, the Bank of Canada also gave a speech. Around 1:30 a.m. this morning, in Singapore, a data release of 0.9% came out for non-oil export month-on-month, indicating the data for January getting revised to 0.9%, comparatively to what was previously at a negative 2.9%. It was the same story for non-oil exports in Singapore year-on-year at a negative 25%, comparatively to what happened previously in January 2021, a negative 20.6%. Also, Great Britain, which is quite highlighted at the bottom, retail sales month-on-month in Great Britain improved. It revised from 1.2% to 0.5% in actual data. Looking at the forecast was negative, but the outcome came positive. As at 8 a.m. in the morning, retail sales in Great Britain and ex-fuel month-on-month data came out at 0.4%. Well, an improved version of it comparatively to 1.4% on the negative previously. While inflation, around 8.45 inflation in France went higher to 6%. Previously, it was 5.9% in January, or year-on-year it was 5.9% in January 2021. Rather 5.59% rather in January 2022, but came out this January of 2023 at 6%. Inflation rate month-on-month had been upward in France. Well, that's the outlook, looking at the economic calendar for today and what the peculiarities of events are. We'll go straight to Mozambique's inflation rate. The annual inflation rate in Mozambique eased for the fifth straight month to 9.78% in January 2023 from 10.91% in the previous month. It was the lowest reading since last May, mainly due to a slowdown in prices of transportation in December, restaurants and hotels, and furnishing and household equipment. However, prices climbed further for some CPI items such as food and non-alcoholic beverages, housing and utilities, education, miscellaneous goods and services, among others. On a monthly basis, consumer prices were up by 0.98% after increasing by 1.35% in the previous month. It would be a good time to look at the charts indicating inflation in Mozambique. It's been a little here, a little there for Mozambique. According to the charts, as at April 2022, inflation in Mozambique was at 7.9%. It went further upward to July 2022 at 11.77%. But it began to slow down the next month at 12.1%, and since then, there's been a slowdown continuously from 12% down to 11.83% in October, and further downward as of January 2023 at 9.78%. It would be time to go to the commodities market to see what the price of crude oil is and what the market outlook is. We begin with Brent. Brent crude heads for weekly decline. Brent crude futures fell below $85 per barrel today, on track to end the week about 2% lower, weighed down by strong US economic data and hawkish remarks from the Federal Reserve officials who hinted at another 50 basis point rate hike to bring down inflation. Oil prices also came under pressure earlier this week after the US government announced plans to release an additional 26 million barrels of oil from strategic reserves, and as data pointed to a large buildup in US crude inventories. Keeping a floor on the prices, the IEA, which is International Energy Agency, raised its forecast for 2023 oil demand growth, with China making up for nearly half of the expected increase after it dismantled strict COVID restrictions. The IEA also said that restrained production by OPEC Plus could lead to a supply deficit in the second half. Saudi Energy Minister Prince Abdulaziz bin Salman recently said that OPEC Plus plans to keep its current policy of cutting oil production by 2 million barrels per day until the end of 2023. It would be a good time to look at the market and see what the energy market is saying this morning, the price of crude oil in the market. Now, crude oil price for the US crude is at $77 per barrel, upward or downward rather by 1.41 points, a negative 1.8% decline. For Brent crude, it's $88.37 US dollars per barrel, but the identity is totally different, dropping this morning by 1.757 points, a negative 2.06%. Looking at natural gas is indicative of some weakness as the rest of the energy market, downward by 0.0286 points, a negative 1.2% decline. Gasoline is the same story, heating oil the same story, and coal the same story. Let's look at what's happening in the metal market. The metal market outlook this morning. For gold price is downward. Most of the markets seem downward this morning. Current price $1,824.14 US dollars per ounce, downward by 13.33 points, a negative 0.73% decline. For silver is the same story, downward this morning, and copper slightly downward this morning. Looking at steel is gaining this morning. Current price 4,162 Chinese yuan per ton, upward by 80 points, a 1.96% appreciation. For iron ore, slightly upward. Lithium, no significant difference in the market. Let's look at the agricultural market. The agricultural market indicates some positivity, at least comparatively to the rest of the market. Soybeans upward this morning by 1.25 points, a 0.08% appreciation. When you look at the price of soybeans, it's 1,527 points. The market is moving quite fast. 1,528 US dollars per bushel. For wheat, it's 762.4 US dollars per bushel, downward by 2.4 points, a negative 0.31% decline. Well, palm oil is doing slightly well this morning, back up to 4,098 Malaysian ringgit per ton, upward by 29 points, a 0.71% appreciation. And that's the outlook from the commodity markets. We'll go on a short break. When we return, we'll look at the forex market and the peculiarities around the US dollars. Welcome back. It's time to look at the forex market. Looking at the forex market, we'll begin with the Aussie dollar futures. Aussie dollar futures were down 0.25% after recent Australian job data disappointments. Bill Baruch examines this. Let's find out from Bill.
Good afternoon, traders. I'm Bill Baruch from Blue Line Futures, and today we're going to talk about the Aussie dollar. Despite a poor employment report out of Australia last night, hot PPI data out of the US today, and a beat of US weekly jobless claims, the Aussie has fared decently, with futures only down about 0.5% on the week and 0.25% on the session. The employment change for Australia out of January was expected to show a gain of 20,000 jobs. However, it decreased by 11,500. Furthermore, December's loss of 14,600 was revised to 19,900. Also, the unemployment rate out of Australia rose to 3.7%, an 8-month high. So what's the underlying strength? Australia is a commodity currency, and the price action of its currency can also be tied closely to China, its #1 trade partner. CME copper futures gained nearly 3% today, and China's President Xi made upbeat comments about the economy as the reopening continues, while the US and Chinese officials are gearing for a meeting despite recent geopolitical confrontation. From a technical perspective, the Aussie traded to the lowest level since January 6th, but rebounded on the session to hold the spot 69 mark upon settlement, which also aligns closely with the 50-day moving average. As the tape weakens, it has traded below the 21-day.
That was Bill Baruch giving an outlook on the Australian dollars. Let's move straight to the market to see what the performance of the market is this morning. The euro against the US dollar has been strenuous, that combination, that pair. This morning, it's still slightly downward, a little here, a little there, not being able to go past the 1.07 mark. Current price for the euro against the US dollar is 1.06 US dollar, equaling 1 euro, downward by 0.0033 points, a negative 0.31% decline. As other markets are going downward, similarly with the forex market is downward this morning, though slightly. For the pounds against the US dollar, it's 1.19 US dollar to 1 pound, downward by 0.0576. For the first time this week, it's gone downward beyond the 1.2 points. For the Aussie against the US dollar, it's similarly downward this morning. Let's look at Naira's perspective in the market. What Naira is doing against the US dollar is back up from yesterday's low of 459 Naira to 1 US dollar to 460 Naira to 1 US dollar at the international and exchange window. On a yearly basis, it's still 10.76% appreciation for the US dollar against the Naira. Against the euro, current price 492 Naira, equaling 1 euro, a 0.53 points appreciation, a 0.11% appreciation for the euro against the Naira. For the pounds against the Naira, current price is 554.35 Naira, equaling 1 pound, upward by 1 point, a 0.2% appreciation for the pound against the Naira. Let's go to the parallel market to see the performance of the Naira in the parallel market. The parallel market has been a steady outlook in recent times, but going even further for the euro, for the dollar, current price 780 Naira, equaling $1 if you're buying, and if you're selling, it's 773 Naira to $1. For the pounds against the Naira, if you're buying, it's 940 Naira to 1 pound, and if you're selling, it's 925 Naira to 1 pound. The euro to the Naira, if you're buying it, it's 805 Naira to 1 euro, and if you're selling, it's 790 Naira to 1 euro. Well, the outlook is there for Canadian dollar to the Naira, the Rand, South African Rand to the Naira, the Dirham to the Naira, the Yuan to the Naira, as well as the Ghanaian Cedi to the Naira. While looking at different perspectives and the performances of the market this morning, it would be a good time to have crypto insights. What is happening in the cryptocurrency world? Bitcoin trends and trades higher. After a volatile ending in 2022, Bitcoin has posted an almost 50% gain between January 1st and February 1st. What factors have driven the cryptocurrency higher? That's the question, but to get an answer, let's listen to Jim L'Oreal.
After a volatile ending in 2022, Bitcoin exploded higher, posting an almost 50% gain between January 1st and February 1st. The move came at the tail end of a significant down move in the US dollar index that brought it from a high near 114 in September to a low near 101 in early February, perhaps not coincidentally on the same day that Bitcoin put in its high. Now, in recent days, there have been some interesting developments in both dollar and Bitcoin. The February 14th read on CPI came in higher than expected and boosted the dollar as expectations for the Fed funds terminal rate shot above 5.25%, according to the CME FedWatch tool. Oddly, Bitcoin rallied alongside the dollar in the 2 trading sessions after the CPI release, posting an over 4.7% gain in the combined sessions. Now, another important theme in Bitcoin trade is the potential for increased regulation. Some traders believe that steps taken in the US to shut down an issuance of a Binance stablecoin may have contributed to Bitcoin's 14% loss from February 1st through the 12th. From a technical analysis standpoint, it appears that Bitcoin support is 21,500, and its bounce from there is part of its recent upward momentum. Reminder that CME now offers...
That's the outlook from cryptocurrency and insights from L'Oreal. Let's go to the market and see what the market is saying regarding Bitcoin amid all the falls. Boom! This morning, Bitcoin dropped a massive 841 points. All the markets are struggling this morning. Current price 23,716 US dollar, equaling 1 Bitcoin. Bitcoin had reached that 25,000 mark before dropping downward, a negative 3.45% depreciation. For Ether, it's the same story, with dropping by a little 21 points, a negative 1.28% depreciation for Ether. Its current price is $1,661 for one Ether. Well, Binance is quite decent this morning, slightly upward by 4 points. Cardano, a little here, a little there. Solana, $22.57 equaling one Solana this morning. That's the outlook from the market, the forex market, and crypto outlook. Let's go to the global stock market and see what's happening in the stocks. Beginning with Asian stocks. Asian stocks fall on Fed concerns, just like the rest of the markets are falling on Federal Reserve's concerns. Asian equity market fell today, tracking Wall Street lower as stronger than expected US economic data and hawkish remarks from the Fed officials who hinted at another 50 basis points rate hike rattled financial markets this morning. In Australia, the Reserve Bank of Australia, LO, also said further rate increases would be needed to tame sky-high inflation. Shares in Australia, Japan, and South Korea all declined this morning. Let's move to the Nigerian stock market to see what the outlook was yesterday. This outlook would set a template to what could happen in the market today. The equity capitalization in the Nigerian capital market rose by 0.02%, a slow rise it is, at the close of trading on Thursday. This represented a 7.53 billion naira growth in the market capitalization from 29.68 trillion naira to 29.69 trillion naira after 5 hours of trading. The all-share index increased by 12.54 basis points to close at 54,520.2 points. Investors traded 125.86 million shares, valued at 3.6 billion naira in 2,670 deals. Let's look at the top gainers. Japan Gold led the gainers list with a 7.14% rise in share price, moving from 28 kobo to 30 kobo per share. A good look at the bottom losers. Cotvale topped the losers table after shedding 9.62% to drop from 52 kobo to 47 kobo per share. Guarantee Trust Holdings led the day's trading with 19.17 million shares, valued at 481.72 million naira. That's the outlook on today's edition of Business 360. My name is Blyden Kim. Thank you for watching.